Traders, let me hope you guys are doing fine. It's your boy Top. Guys, again, I'm here to let you know that hey, doing nothing is actually strategy. If you want to make it as a trader, you have to understand that if you're in front of the market, just because you have capital to trade doesn't mean that you should be executing trades. Okay, so you should understand that doing nothing is actually a strategy that professional traders use every single time whenever they're in front of the market. Again, and members, make sure that you always predefine your risk whenever you're going into a trade. You understand? Predefine your risk before executing any trade, because there's no trade that are going to execute that might be a winning trade or a losing trade, meaning that any trade that you're going to execute, there's a possibility of it turning into a winning trade or a losing trade. So if you want to be staying longer in the market, make sure that you always predefine your risk before in advance, okay? And then make sure that you stick to your your risk that you are doing that you are predefining in before. Okay guys, again, make sure that you target a risk reward of 1 to 2, 1 3, or 1 to 4. Reason being that the money that you're making should be more than the money that you're losing in the market. Okay, again, members, make sure that don't be so greedy targeting a risk reward of 1 to 10, whatever, because the market might go your way and then turn around. Again, members, the market doesn't owe you anything, meaning that if you go in front of the market and you don't make anything, you should understand that the market doesn't owe you anything. If you make a losing trade, just walk away and then come back the next day. Again, losing and being wrong is part of trading, meaning that any trade that you're going into, there's a possibility of the trade turning into a losing trade, or even you being wrong about the direction. So if you find yourself that you're wrong about the direction, or you're losing, you have lost a trade, you shouldn't get frustrated. You should accept that losing and being wrong is part of trading, and then that's the reality. Again, there is a random distribution between wins and losses, meaning that any trade that you're going to execute, there's a possibility of the trade turning into a winning trade or it turning into a losing trade. Meaning, in the market, there's a random distribution between wins and losses. You cannot know which trade is going to be a winning trade. You cannot know which trade is going to be a losing trade. So meaning, there's a random distribution between wins and losses. For example, if you're going to be doing the next 20 trades in the next 1 month, you cannot know which trade is going to be a winning trade, which trade is going to be a losing trade. So there's a random distribution between wins and losses. And again, you do not need to know what's going to happen next to make consistent income. What does it mean? You cannot know what's going to happen next because you are not the one moving the market, okay? And your duty is not to predict what's going to happen next. Your duty is to react on your edge. So as a trader, you must be having an edge that you execute every single time in the market. That's how you're going to be making money. Okay, there's something called as an edge. If you don't have it, look for it. Okay, again, you do not need to know what's going to happen next in the market to make money, because you cannot even know what's going to happen next. So your duty is not to predict what's going to happen next. Your duty is to make sure that you react on your edge without hesitation or reservation. So as long as you see an edge, react on it, put your stop loss, put your take profit, let the market do its thing. If your trade turns into a losing trade, accept and move on. If it turns into a winning trade, accept and move on. A loss isn't dangerous, and then a win also is not special. Again, members, it's more important to follow your rules than to make money, because any money that you make, if you don't follow your rules, you will eventually lose it back to the market. That's how it works. Every single time you go in the market without rules and whatever, you make money. You think that the market has given you the money, but I promise you, the market will always come back and take it away from you. So again, if you're in front of the market, you have to understand that it's more important to follow your rules than to make money. If you execute a trade and the trade turns into a losing trade, accept and then move on. Make sure that you follow your rules more and more and more, so that you can strengthen your discipline. Again, members, if you ever get a quality setup, make sure you execute. Stop analyzing, stop looking for reason why you think a trade will not work just because yesterday's trade or the other day's trade didn't work. Okay, execute a trade without hesitation or reservation. As long as you're seeing a setup in front of you and it's a quality setup, everything that you need in a setup so that you can execute it, execute the trade. Stop looking for reasons why you think the trade might work or might not work. Again, members, do not revenge trade or overtrade just because you have lost a trade. Revenge trade and overtrading is the reason why most people haven't made it yet in life. And I'm here to let you know that if you really want to make it as a trader, stop revenge trading, stop doing all those things. Again, members, starting from tomorrow, dedicate yourself to start trading for a new reason. What does it mean, starting to trade for a new reason? Trading for a new reason means you're going to focus on the process, not the outcome. The reason why many traders don't make it in trading, because they focus on the outcome instead of the process. So dedicate yourself, start focusing on the process than the outcome. That's how you're going to make it in a long run. Again, members, you must be a disciplined trader. What does it mean? You must go into a trade with a structured plan, knowing exactly how much you're going to risk, how much you're going to be targeting, how many trades you're going to be doing in a day, what happens if your stop loss is hit, and whatever. You must have those things pre-planned before going into a trade, and whatever whatever happens in the trade, you have to make sure that you have these rules that are going to guide you in front of the market so that you do not do other mistakes. Again, members, every losing trade puts you closer to a winning trade. What does that mean? Any trade that you're going to execute today, it is possible that it's going to be a losing trade or whatever, but you should understand that there's random distribution between wins and losses, meaning that every losing trade that you get in the market gives you a chance to put you closer next to a winning trade. Again, every day is not a trading day. What does that really mean? If you're in front of the market, just because you're seeing the market is moving, whatever, it doesn't mean that you should be executing a trade. You understand? So every day is not a trading day. Just because you're in front of the market doesn't mean that you should be executing a trade. A lot of traders execute trades just out of boredom, and then they end up making a lot of losses, and then by the time they start making profits, they are just paying for the losses. Don't do that to yourself. Again, members, make sure that you execute only one trade a day. A lot of traders do 3, 4, 5 trades a day, but I recommend one, maximum 2, but I recommend one. Why? The market doesn't provide a lot of quality setups in a day, and you have to preserve your capital, so it's better you do only one trade in a day. Again, members, if your stop loss has been hit, what do you have to do as a professional traders? Professional traders have learned to know when not to be in front of the markets. Okay, you should be doing the same. If your stop loss has been hit, walk away from the charts. Why do you have to walk away when your stop loss has been hit? Because whenever your stop loss is hit and you walk away, you're going to protect your capital. Why do you have to protect your capital? The market will always provide you with better quality setups in the future. So when your stop loss has been hit, walk away and then accept the reality of the market, and then come back the next day. And then again, when you walk away from the chart when your stop loss has been hit, you are also going to preserve your edge. Remember, there is a certain setup, there is a type of a setup that you always execute every single time in the market, meaning that that kind of setup, make sure that you only execute that. If you execute that kind of setup and turns you to a losing trade, and then you end up executing other kind of setups, and then your brain is going to get confused. So make sure that you preserve your edge, and again, make sure you also protect your discipline. Remember, members, whenever you execute a trade and a trade turns into a losing trade and you walk away, you are strengthening the muscle, the discipline muscle. Okay, and the more you strengthen the discipline muscle, the more you're going to be unshakable, and then the more disciplined you become, the more you're going to be making money in the future, because the market will not be able to do anything to you anymore. That's how you should be doing it. Again, members, consistency is a function of eliminating errors. For example, you might be having an error of revenge trading or over trading. So you have to understand that if you want to make money consistently in the market, you should put away revenge trading and over trading, because that is only done by amateurs, people who don't know. If you want to become amongst the professional traders, you should accept that losing and being wrong is part of trading. When you enter a trade and turns to a losing trade, accept and move on. Do not revenge trade or over trade. Again, a lot of traders predefine their risk, and again, when they go in front of the chart and then they end up losing more than supposed to lose. Okay, that is also wrong. If you're in front of the charts, make sure you lose exactly what you had predefined. Okay, let me hope you have also understood that. Again, members, make sure that you only execute trades as you have planned them, because at the end of the day, if you really want to have consistency in profitability, you must have eliminated all these mistakes that other people do in the market. Again, the market rewards people who are patient. What does it mean? You really have to be patient to be able to make money in the market. Okay, 80% of the money that is gotten in forex trading is through patience. So if you want to get money in the market, make sure you are patient, guys. Again, the last thing, make sure you journal. Okay, make sure you journal everything that you do. You understand? Make sure you journal everything that you do, every trade that you go into, what has happened before, after, and during the trade. How did you feel? Did you follow your plan and whatever? Okay, if you keep on doing these things every single time, I promise you the compound effect will work in your favor. In the long run, you will be the winner. Of course, you might do these things and then you don't see results in the next 2, 3, 4, 5 months. But if you keep on doing them again and again and again, I promise you, a day will come, then you start seeing money flowing into your account. Again, members, if you enjoyed this video, say something in the comment. I will be seeing you in the next video. Again, love you guys so much. Welcome. Okay.